Hi guys, welcome back to episode 4. The last few episodes I've been showing you what candlesticks are, what trading is, liquidity, all that stuff. But now, how do you actually start trading? Well, first of all, you need a plan before even entering the markets, and that's where strategy comes in. You cannot just buy and sell randomly. That would be basically gambling. You might as well go to a casino. The strategy gives you confirmations. Like it tells you where to enter, where to put your stop loss, where to put your take profits, and it even tells you if it's a good setup or not, if it's worth taking. Now, every trader has their own strategy. Some people trade breakouts, some people trade trend lines, some people trade reversals. There's a lot of different strategies out there. You got to go find the one that suits you, the one that suits your trading style. Now, in this video, I'm going to be focusing on the one that I use. If you don't like it, you can always find a different one. There's a lot of them out there. Now, let me just go ahead and just real quick show you what I do in the mornings. As soon as I wake up around 30 minutes before market open, which is around 9 a.m. Eastern time. So convert that to your time. So 9 Eastern time is when I wake up. And the market opens at 9:30 Eastern time. So I wake up 30 minutes before, just to get ready. All right. As soon as I wake up, the first thing I do is I turn on this indicator, which I'm gonna show you which one it is. Hold on. So first of all, you're on TradingView. You go to indicators and you search up FXN Asian session range. You click it. Now yours is gonna look like this, right? Instead of like this. So what you want to do, I'm just gonna remove it because I already have it. So what you're gonna do is click this little setting icon and just copy everything that I have. I'm gonna scroll down slowly. You can pause the video, take screenshots, whatever you have to do. Now the style, you can choose whatever color you want. So just copy this exactly. If I have this unchecked, uncheck it. That's basically it. You can choose whatever color you want. Okay. And if you want to somehow just, and if by any chance you also want to copy the way my candles look, you could just right click settings, canvas, solid background. You can change the color, symbols right here. You could change the color of the candle. See the the body, the borders, the wick. And while you're here, you can go ahead and put New York time so that you know. Well, this is not really necessary, but it's just that you know that what time it is in New York, which is important because that's where the market runs. All right, so let's get to the strategy, right? So first of all, we click here, we look for the 15-minute, and we look for the 5-minute. We start both of these. Now, you click the 15-minute, right? You grab this little magnet, you turn it on, and now you look for the 8 a.m. candle. So I'm gonna show you guys an example of a trade that I took on Friday. So you look for the 8 a.m. candle or whatever time your chart is in. So for example, mine's in New York time, so I would be looking for 8. If it was my time, I would be looking at 6 in the morning. So 8 a.m. Eastern, you grab this. Well, let me just show you where it's from. Okay, so it's right here, right? You can click it right here. You can favorite the ones that you want. I recommend favoriting this one and these two lines, horizontal line, horizontal ray. So you grab the box. Once you put them in your favorites, they'll be right here. So you grab your box, you you can like feel the magnet like pushing, So you mark out the very bottom to the very top like this, like the complete bottom to the complete top. Now your box is gonna look different. Your box is, what I recommend is putting you're gonna click, you're gonna double click it, and you can click extend to the right, and then you're gonna change the colors, whatever, and then add the middle line. Add the middle line, and that's about it. So you know where the middle's at. Okay. Now, so you're gonna do that. You're gonna mark out the whole entire candle at 8 a.m. Eastern time, and then you're gonna turn on your indicator. You're gonna mark out with the magnet also on. You're gonna mark out the high. Change the color to match the area if you want. Now, what you're gonna do is mark out. So you're gonna mark out previous session highs. So that means only from 8:30. Sorry, from 8 in the morning. You're gonna mark out these three. All right. You're not gonna mark out these. These are from Wednesday. So if it's Friday, if it's Friday, you're gonna mark out yesterday's low and high of the New York session, and then you're gonna mark out the Asia session, and then you're gonna mark out the London session, which is whenever you wake up, assuming you wake up 30 minutes before market open, we're still gonna be in the London session. So you're gonna mark out these. If you have any questions, you could just leave comments. Now, whenever there's a low and a high pretty far, I usually don't mark it unless we're approaching that level. But just in this case, we marked it out. So these are my levels now. Okay. And what do I wait for? First of all, I'll go back down to the 5 minute, right? And I wait for market open. I wait for market open, which is at 9:30. As soon as market opens, well, before that, what I wait for is for a candle close above this, green box, the 8 a.m. orb. I wait for that. And my confirmations, which is what I'm trying to get you guys to understand, is that you need confirmations. You can't just enter and just hope for the best. Now, my confirmations are candle close above, strong candle close above, not just like a weak close above. Like, for example, let me see if I can show you an example. Like, you see how this black candle closed above this line, like barely. I'm not looking for that. I'm looking for a strong close above like this one, for example. Okay. So a candle close above. Now that's a break to the upside. So then I would be looking to buy, but I wouldn't buy right here. I would buy at a pullback, which means that I would wait for price to come back down to either the middle or a key level that I have right here. And I saw that we were already rejecting, before the market had even opened. Right here, we rejected perfectly. We rejected again. So I was like, okay, you know what? This is, and then this candle right here was like, okay, you know what? This is telling me that we're going to push up higher. So what did I do? I waited for market open, which is at 9:30. And this exact candle, what it did is it went down here. It started rejecting. So I was like, okay, you know what, guys? I'm going to buy right here because it's clearly telling me that we're going to have a push up higher. And why? Well, because we're rejecting off this level, and we already had it closed above the orb. So now, what I do is typically, okay. So this is where, risk to reward and risk management come. So I personally risk around $250 to make 500. So I'm making twice as much. So if I lose, I'm losing 250. If I win, I'm winning 500, possibly even more sometimes. But I always risk 250, always, to aim around 500, 1,000, 1,500. So what does that look like in terms of points? I risk around 25 points, and I target around 50 points minimum, sometimes 100 points, depending on where my levels are at. So, like I said, every strategy has your entry model, which in this case was right here, your stop loss, which is always for me 25 points. Your take profit is always 25 points, mainly. Sometimes I do like to hold, but since I had a level here that I was very confident we were going to take out, I decided to hold. So that was 100 points. So here in this example, it's a 1 to 4 risk to reward, meaning I was risking 250 to make 1,000, right? So that's my confirmations, my entry, my take profit, my stop loss, my confirmations. That's basically it. Preferably, normally, I would want to enter off the middle here, but the reason I didn't enter off the middle was because we had this key level that I was just very confident that we were going to reject off. Now, I can show you the strategy, but what I can't show you is experience. So you got to go look at it yourself. You got to gain the experience. And also, let's talk about patience. I could have easily taken this right here, but this was pre-market. This is against my rules. And I was like, I'm only taking trades from 9:30 till around 10:30 Eastern time. And this is why I love this strategy because it's super easy. It's not complicated at all. There's other people who use so many other confirmations and it's just like so many lines in your chart. It's just the best thing to do is keep your charts clean. Have one strategy, good confirmations, and that's it. Don't overcomplicate things. Now, like I was saying, patience pays. For example, if this never went back down to tap this level, I wouldn't have taken anything. I would have been like, you know what? I didn't get my entry. It's fine. We're not supposed to be trading every single day anyways. Well, I mean, it's not a bad thing to trade every day, right? But if the market doesn't give you an opportunity, then just don't take it. I mean, why would you be forcing stuff? That's where emotions come in, all that other stuff, psychology, which I'll be talking about in a different video. But let's talk about strategy hopping. So this is like mainly the beginner people who start like strategy hopping. They learn one strategy, they have a winning week, wherever whatever. Like, oh, this is the best strategy ever. And they have like 2 days in a row losing. Oh, you know what? Let me switch strategy. That's like the biggest mistake you can do. Because first of all, no strategy is 100% win rate. You could have 100% win rate for the week, maybe even for the month. But in general, there is no strategy that has 100% win rate. So what do people do? It's like, oh, this strategy doesn't work because I lost 2 times in a row. Let me switch to another strategy. And when that happen, whenever you switch strategies, you're basically starting over again. So you all that time it took you to learn this one, and you're gonna start with a different one. You're just never gonna adapt to that one strategy. For example, I learned this one right, and I stuck to it for the past maybe a year or so. And if I had kept switching strategies, I would have never really learned like, okay, well, it does this, and when it does that, this and that, etc. Like I would have to start over. And why would you start over when you already had it down, right? So people have losing days. It's normal. That's why risk to reward is very important. People have losing days, losing weeks, maybe even losing months, maybe even losing years. But the goal here in trading, because you're gonna lose. Losses are part of the game. You're gonna lose, especially in the beginning if you don't know what you're doing. That's why risk management and risk to reward is very important. The goal is for you to make more than what you lose. For example, like me, I make 500 when I win, maybe even 1,000, but I would only lose 250 when I lose. So I can lose 2 times in a row and then just win one time and I'll be back to where I was at. Now, if my risk management was horrible, I would be making around 500 and I would be losing like 1,000. So I would lose 2 times in a row, I would be down 2,000. And I only win once, I would only be up 500. So I would be down 1,500 even though I already won, right? So you know what I'm trying to say is make more than when you are risking 250, aim for 500, 1,000, 2,000, whatever, etc. But as long as it's 500 and above, that's just my style. So that's very important. So yeah, they just keep on going to different strategies and never really master one. That's why a lot of people just, you also got to set up some rules for yourself. Me, these are my rules. I trade one time a day, regardless the outcome, whether it's a win or a loss. I close the charts and I go on about my day. Or sometimes I stay on with my friends, give us some ideas, but I don't really take them. So one trade a day, and I only trade from 9:30 Eastern time till 10, maybe even 10:30 Eastern time. So that's about 1 hour a day. If I don't have any entries within that 1 hour, then I'm done. Usually why I do this is because around 10:30, 11ish is whenever the volume starts to die. For example, we had a decent move up and down, right? Right here it was still 10:30, 11. Right here is whenever the market starts to slow down. So for example, this was like from 11 to 12, which is lunch hour. So I'm done. Like I'm usually always 100% done by 10:30. Like by 10:30 I'm already, you know, back to doing whatever I have to do. Okay, so that's basically it. Let me just summarize. So you got to find a strategy that suits you, your trading style, whether you take one, two, three trades a day, um, etc. Because there's a lot of strategies out there that take multiple trades a day. I only take one because that's just my rule. I could take multiple, but I choose not to. So find your own strategy, you know, do proper risk management and a good risk to reward. And don't strategy hop. In the beginning, I understand because you're still looking for your strategy. But once you get one down and you see success with it, because every strategy works as long as you have good risk management and good risk to reward. So every strategy works. However, there's some strategies that give you more setups throughout the day or less setups throughout the day. So you got to find your own style, your own style of trading. Don't expect the strategy to be 100% win rate because it's not. Whoever tells you they have a 100% win rate is lying. Unless they talk about 100% win rate this week, because I have 100. I've had 100% win rate for like a week, 2 weeks, but never for like a month and above, right? Because it's just no one has a 100% win rate. All right, so next episode I'm going to be talking about psychology, prop firms, and live capital. Trading psychology like fear, greed, revenge trading, over trading, all that stuff, and why beginners fail. And then I'm going to be talking about prop firms, which are funded accounts, evaluations, payouts, all that stuff, and live capital, which is your own money. I will explain that on the next video. So thank you guys for watching and stay tuned for next video.